Section 8. The real estate professional's role in the pre-approval process, helping your buyer succeed. In the last section, we discussed why obtaining a pre-approval gives buyers a stronger position when they begin making offers. A pre-approved buyer has already completed much of the financial review with their lender, giving sellers greater confidence that the transaction is more likely to move forward successfully. Now let's talk about your role in that process. Many new agents believe they need to understand every detail of mortgage lending to help their buyers. Fortunately, that's not the case. Your job is not to become a loan officer. Your job is to help your client understand the process, connect them with qualified professionals, manage expectations, and keep the transaction moving smoothly. When you understand where your responsibilities begin and where they end, you provide exceptional service while staying within the scope of your Arizona real estate license. Preparing buyers for success. One of the best things you can do for a buyer is encourage them to meet with a lender before they begin seriously shopping for homes. A buyer who understands their budget is more confident when making decisions. They spend less time looking at homes they cannot afford and are better prepared when the right property becomes available. This preparation also benefits the seller. Offers submitted by buyers who have already completed the pre-approval process often provide greater confidence because much of the financial review has already taken place. Although a pre-approval never guarantees the loan will close, it demonstrates that the buyer has taken an important step toward financial readiness. Arizona broker tip: create a simple new buyer checklist that includes obtaining a pre-approval, gathering important financial documents, and discussing the home buying process before showing homes. Spending 30 minutes preparing a buyer at the beginning of the relationship can save weeks of frustration later in the transaction. Working with lenders. Every successful transaction depends on good communication. As the real estate professional, you should establish a positive working relationship with the buyer's lender, while always respecting your client's privacy. With your client's permission, check in with the lender periodically during escrow to make sure financing is progressing as expected, and to determine whether any contract deadlines may be affected. Good communication often helps identify small problems before they become major issues. Remember, however, that the lender is responsible for discussing the buyer's financial information, not you. If buyers ask questions about interest rates, qualifying ratios, loan programs, or underwriting decisions, those questions should always be directed back to the lender. Nicole's buyers had already received a pre-approval and quickly found the perfect home. A week after the contract was accepted, Nicole contacted the lender to see how financing was progressing. The lender explained they were waiting for updated bank statements from the buyers. Nicole reminded her clients to upload the requested documents that evening. The following morning, underwriting continued without delay. Nicole didn't collect the documents herself or review the buyer's financial information. She simply helped keep everyone communicating. That small follow-up helped the transaction stay on schedule. Avoid crossing the line. One of the easiest mistakes a real estate professional can make is trying to answer questions that should be answered by the lender. For example, avoid telling buyers, "You definitely qualify. Your credit score is high enough. This loan program is your best option." Those decisions belong to the mortgage professional. Instead, a better response might be, "That's a great question for your lender. Let's give them a quick call so you receive the most accurate information." That simple response protects your client while also protecting your real estate license. Choosing lenders responsibly. Buyers often ask for lender recommendations. There is nothing wrong with providing referrals to experienced, licensed mortgage professionals. In fact, buyers frequently appreciate recommendations from someone they trust. However, your recommendations should always be based on professionalism, experience, communication, and customer service, not because you receive anything of value in return. Federal law, including the Real Estate Settlement Procedures Act, RESPA, prohibits accepting kickbacks or referral fees for directing business to settlement service providers such as mortgage lenders. Your reputation should be built on trusted relationships, not referral incentives. A well-prepared buyer is more likely to meet financing deadlines contained in the Arizona Residential Resale Real Estate Purchase Contract. By encouraging early communication with lenders, monitoring financing progress, and referring technical lending questions to qualified mortgage professionals, Arizona real estate licensees help reduce financing delays, improve communication, and better protect both their clients and the public. Online discussion question 1. Why should a real estate professional encourage buyers to obtain a pre-approval before beginning their home search? Answer: obtaining a pre-approval helps buyers understand their purchasing power, strengthens future offers, reduces financing surprises, and improves the overall efficiency of the home buying process. Question 2. Why is it important for real estate professionals to refer technical financing questions to the lender? Mortgage professionals are licensed and trained to provide lending advice. Referring buyers to the lender helps ensure accurate information while keeping the real estate professional within the scope of their license. Question 3. How does communication between the agent and lender contribute to a successful transaction? Answer. Good communication helps identify potential financing issues early, keeps all parties informed, supports contract deadlines, and improves the likelihood of a successful closing.